Um, One of the things that I've been noticing recently is that we've got a parabolic developing in the S&P 500. First clue is this is an old chart here, July 26th. The first clue was we had a rising wedge, which we expect that it should resolve downward, and instead it resolved upward and it hit overhead resistance at the all-time high. Oh, there we go. Okay. So we had one, there's the old rising wedge that resolved upward. And then we got another one that also resolved upward. And that just happened, of course, a few days ago. At that point, I saw this arc shape on the chart and thought, maybe we're getting into a parabolic here. So the next chart we have is the weekly chart, and here's the parabolic we got late last year and early this year, and now here's what we've got going here now. Note that it's kind of thick and heavy down in this area. It should start thinning out if that's what we're going to get as a parabolic, but right now it's on a pretty good path to go that way, meaning that mostly we could expect upside, and every time we get to overbought condition, it's probably not important. But it's one of those things we'll watch as it develops, and we should see it get steeper and steeper if what we have here is a parabolic up move. Any questions?
So if I know that we talk about parabolics and the danger of them, can you kind of reiterate the danger of parabolics?
Well, once we get really started going really steep, it's really hard to pick a top. So you want to keep your stops closer and be ready to jump, because when they go, as you can see early this year, this is what happens. They go from straight up to straight down. And this one, if it keeps developing, it might be a month or two before we have to deal with the problem there.
All right. The other thing that I was writing down was that, you were looking at the bearish rising wedge, and instead of concluding, as it should have with a breakdown, you concluded with a breakout. Do you find that especially bullish, or?
Yeah, it is. It is a bullish result, because a rising wedge, basically the basic rule is the steepest line is the one that'll break first. So the bottom of a rising wedge is steeper than the top. So you expect, just as a matter of regular correction, it doesn't have to mean the world's coming to an end, but we expect when it gets into a rising wedge pattern, that as a corrective move is going to resolve downward. And once it's broken down, I don't really have a rule of thumb in terms of how far it's got to go, because once it's broken down, well, that's the it's met the expectation, and then from there on you have to play it by ear and see how it develops.
Hey, Carl, can I play devil's advocate for a minute?
Sure.
All right. Now, when I think parabolic, obviously I'm thinking that price action on a on a relative scale, looking back long term, we expect to see, for instance, PPOs or PMOs at highs like we haven't seen before. And when I look at a longer term chart on the SPY, like a weekly chart that goes back throughout the entire bull market, we've seen PMOs that have been up around 5. And yet currently right now, the PMO is only sitting about 2.6. So on the daily chart, I kind of see what you're showing in terms of a parabolic, but do you consider the fact that the weekly PMO is nowhere near some of the highs that it's had throughout this bull market? I mean, would you still believe this to be a parabolic, or is that only a short-term parabolic that you're talking about?
Well, I would say it's a nascent parabolic. It's just getting started, so it could go up quite a bit more and last, a month, months longer before, and assuming it does that, you're going to get a PMO reading up in the area of 4. But see, as I said, right now it's just starting to develop. The PMO is bottomed and it's just starting up again. Okay. And I'm basically saying, well, keep an eye on it because we keep having these bearish formations resolving bullishly. So that's a good sign for the bulls, and be prepared to see more and more bullish outcomes.
Got it. Thank you.
And one of the things that I saw on a list somewhere is that somebody wanted you to do an OBV workshop. I am going to do a mini workshop here, but just to make a few points that people maybe don't know about OVV and see how useful it can be. OBV is very simple to calculate. If the price closes up, you add volume to the cumulative volume figure, and if the price closes down, you subtract the day's volume from the cumulative volume, and you end up with an OBV chart. One of the things I like about the OBV is that it's not finite. It doesn't have a finite range. The opposite of finite would be infinite, but of course, it's not really that crazy. But it can go. There's not any set range on OBV, like the advanced decline line. But where you take a PMO or an RSI, PMO is kind of anchored to that 0 line. The RSI has a range of 0 to 100, and there are a lot of the other indicators are like that. They have a finite range. So and you can get some rather interesting results because of that. Just a couple of examples here. Here we have a price going sideways, and we have a positive divergence on the PMO, and then we have a reverse divergence on the OBV, which is really excellent. Reverse divergence, in this case, you've got more down volume than up volume, even though the price is flat. Well, that's a good sign. It means the volume may be heavy, but it's not pulling price down. And eventually we get the expected result, which would be higher prices out of that. Here we have another reverse divergence. We've got price making a lower top and OBV making a higher top. This means that even though there's a lot of volume, up volume is king in this particular configuration here. So even though there's a lot of up volume, it's not pushing price higher. So in that case, the reverse divergence is bearish. And I have one more chart, which is much richer in content than that first one. But here we have a top beneath the top, whereas you've got that the PMO confirms that, and here we have a reverse divergence, which is bearish in this case because OBV is making a higher top than price is making a lower top. Coming next, you've got prices price a low here and a lower low. Positive divergence with the PMO because it's flat, and then we have the confirmation on OBV. Confirmations are like watching grass grow. They just confirm. Over here we have a lower low. We have this confirmation on OBV, and now on the on balanced volume we have a positive divergence, a higher low. And that's very positive. Again, it's like even though price is going down, volume's drying up on that particular move. And finally, we have a higher high and a negative divergence on the PMO, and then the confirmation on the OBV. Any questions on that?
I actually do have a question regarding the parabolics. So they said regarding a parabolic, what would you look at daily at confirmation, and what would the target be?
You can. Particularly in a case where you're making new all-time highs, there's not any way you can guess what the top's going to be. And when it's really moving fast and vertically, it's just a guess.
Right.
You can say, okay, I've made enough money. I'm getting out before this thing crashes, because it ultimately will. But like I say, right now we are in the beginnings of of a parabolic move. It's really, right here is the interesting part. We haven't got there yet. We're still down in this area, I think. Mm-hmm. So this could fizzle, and I'll say, never mind. But right now, it's looking, the way the market is acting. I think it's very possible we're going to see another one of these. Mm-hmm. That'll be fun.
Well, not to put you on the spot against Tom McClellan, but somebody was saying that, the last time Tom McClellan was on the show, he was calling yesterday a bottom in the market, that we should look for even higher prices coming out of yesterday. And so what would be your opinion on that?
Yeah,
I'm trying to figure out.
Yeah, I'm trying to figure out where a bottom would be.
Yeah, where the bottom would be, because the last I know, he was still looking for a pullback.
I thought when he was back with us back in maybe the spring, he was just looking ahead, and he was saying we could have some summer weakness, and he thought maybe there would be an August bottom, and then we would take off from that point, go forward. But we never really put back like we normally do during the summer. I think that's what maybe the question's referring to, that we never really got that bottom that Tom was looking for.
Really, it doesn't show any inclination at this point to going down, and like he has been looking for. So I think the bottom that he was looking for you'd have to say this is the default right there. Mm-hmm. Now, I don't know if you'd agree with me, but I'm just saying.
Yeah.
Yeah, I think we've done that, and I guess, and here we are moving higher. Look at this. It's just, Yeah. It's a mess.
It is moving parabolically for sure. And I know we've had one of the, maybe a concern or not, what would you say? I mean, you circled that PMO. It's been very, very flat, and prices just continue to rise. What do you make of that?
Well, the PMO is basically is based on a rate of change. So if you're going higher at a very, very even rate of change, the PMO is going to flatten. And so it's flat, and it's above the zero line substantially. And so it's just confirming that you've got good strength in there. And the flatness is not the problem. It's not a problem because it's above the zero line, well above the zero line.
Mm-hmm.
So, and it looks like it's turning up again. It's getting stronger, so we might see, get up there in the 2.0 area soon.
Right. Well, I know, and I haven't written about it, but I will be today, is we now have all of those decision point scoreboards are now completely green for the NASDAQ, OEX, SPX, Dow, every single one of them in all three timeframes for the PMO and the trend models are now all on buy signals, which is, I haven't seen, I mean, we've been doing the scoreboards for quite a while. I don't remember seeing all green holding up for very long. So it'll be very interesting to see if, the NASDAQ was actually the last one to fill in, and it got its PMO buy signal on the daily chart yesterday.
Yeah.
So I'm not sure, a lot of times I remember when we were doing that market summary, when we had everything on a buy, obviously we're in a great bull market situation.
You're fading out, Aaron.
Oh, okay. Obviously, you're in this bull market situation, but now it's a question of, okay, well, how long can we withstand having all those buy signals all in all of the three time frames? So, I mean, I think it supports obviously that we're in a strong bull market, but then the question is going to become, where is the weakness going to show, or is it going to just be a painful drop in a couple days like we saw back in February?
No, I don't think we're going to reverse like that. I mean, that's just a guess, but it's just that last leg up. How many? That's weeks. Yeah, it's like 5 weeks from the bottom at the beginning of the year to the final top. That was relentless and steep. We haven't got there yet. Mm-hmm. Haven't got that kind of thing. Now, it doesn't mean it can't turn around in the normal course of events, but in terms of parabolic, we're not near there yet.
Yeah, not vertical enough.
Right. Okay. I wanted to revisit the advanced decline lines that I talked about last time. We had, up until the market went past the old high, we had reverse divergences going. And it turned out, I thought, well, I started breaking it down. I thought maybe it's not as clear cut as that. And I looked, and we had reverse divergences up to this point and this point, making higher highs against lower highs in the price. And then at that point, I think we had to disconnect from that structure and start working from the bottoms in here and start following the rising tops. So from here on, it was confirming price, even though the market had not hit a new high until it got up to here. The fact is, though, it was the indicators, advanced decline lines, were confirming the price rise. And that's it on that, unless there's a question. And finally, I'm going to take a quick look at the earnings charts. The hashtags on the hash marks, I should say, on the right-hand side of the chart here, red, blue, and green, show the range of where the market would be if it was at PE of 20 for the red line, and PE 15 for the blue, and PE of 10 for the green. PE of 10. Doesn't that sound wonderful? But right now, the market, this is where it's supposed to be, by the way, these hashtags, marks, that's where the bands will be by the end of this year based on projected earnings. And we can see the price has already gotten to the top of the range that we expect for the end of the year. And as I said before, it's super overvalued because it's about a PE of 25 and well outside the normal range of the bands here. You can't buy and sell based on this, but you can be aware that there's a problem in valuations, that it is overvalued, and eventually, as you see in here, it's going to catch up. But who knows exactly when that's going to happen. It's just one of those things to keep in the background of your head that, well, not everything is as great as you hear saying on the TV. And that concludes the presentation.
All right.
Hey, Carl, I got a question for you.
Sure.
I know that, especially having Aaron on the show as co-host, and talk a lot about the on-balance volume. Do you ever look to the accumulation distribution line for confirmation of the on-balance volume, or do you just find on-balance volume to be a better volume indicator?
I don't use accumulation distribution. I know what it is, but I'm not familiar with it because I don't use it. That's an interesting question, though. Could probably take a look at that.
Yeah, I know that, every once in a while, we will get a difference when you look at the two. And I know Aaron and I have, talked about this sometimes and pulled up charts where occasionally you'll see the on-balance volume going up one day, and then you'll see the accumulation distribution line going down. And I know on-balance volume, if a stock is up, then the on-balance volume goes up by the amount of the volume. But I think the accumulation distribution looks at it as to where it closes relative to that day's price action. So what can happen, for instance, if a stock is trading at 20 and it gaps up to 21, but then it comes back down and closes at 20.50, on balance volume would look at that and say that that's a positive because it's up 50 cents for the day and the line goes up. But accumulation distribution would look at it and say, well, it closed near the low of the day. And so it ignores the fact that it's up from the prior day's close and only looks at that action that day. And sometimes it comes down. And so I was just curious whether or not, you had looked at that with some of these divergences that you were speaking of, and just whether or not you think that might add anything by using both of them to confirm, or whether, again, you just would rather stick with the on-balance value.
No, I haven't, but it's an interesting point. And I was thinking today, too, what would be nice is if we could get OBV calculated on tick volume throughout the day. Now, that would be fun.
Yeah. That would be. That might appeal to me because I'm a minute by minute kind of guy.
Yeah. I think it could be a lot different, but again, sometimes you think, this is going to be the perfect indicator, and it's not.
I was trying to find a stock where I could kind of pull up and show the difference between. And actually, maybe this is not going to be a great example.
Well, while you're looking for that, Tom, I did have a question. They were asking, okay, you showed the OBV in a reverse divergence in one case where that was bearish. And so they didn't quite understand why a reverse divergence on the OBV is bearish. But sometimes it's bearish, sometimes it's bullish, depending on what's going on, correct?
A reverse divergence at the top is bearish. Okay. Like right here, we've got prices near the highs, and this is trying to go toward and make a new top. the reverse divergence in this case is telling us there's a lot of volume going into this up move, but it's not enough to get price moving like it needs to be. Let's go back to the other one. I think there's an example of the this one here. Okay, here's a reverse divergence. Okay, this is another reverse divergence at the top. Again, we got price going, making a lower top, and OBV making a higher top. I guess I don't have an example of a reverse divergence for a bottom. This would be the kind of thing you'd see right here, would be a lower OBV low, and let's just say the price stayed up here. That would be a case. But reverse divergences on down moves are bullish, and on up moves, towards the top of the move, they're bearish.
I do have. Did you have any other questions, Aaron?
No, I think that pretty much covers it.
I think the good point to make here is that the reverse divergences on OBV are really really great patterns to watch for. You don't get them. You don't get reverse divergences on like the PMO. Maybe you do, but I don't know where they would be. And the same with, you can get any kind of indicator that doesn't have a finite range. You look for them, and it's. They say that that's one of the point I wanted to make, is that they say that volume leads price. Well, here's a case where it does. But if you have a reverse divergence at the top, that means you're going to have a higher OBV versus lower price. That is a case where volume is not leading.
Right. The one last one, I know we're getting long here on this segment, but there seems to be several PE ratios to pick from. Which is the best and why?
I'm not sure. Okay, if we're just talking about my chart, that's, let me get to there. But mainly, there's, for a market index at least, the average, the acceptable range for PE is from 10 to 20. And 15 is just there to know that, well, you're fair priced fairly. But when you get up to PE of 20, it's now become very overvalued. When we get down here in the PE of 10, then you're looking at, based on value, a good place to buy. But you don't really, you don't pick one of the three. It's just, it is what it is. And it has to do with your PE. It's basically, I better not get into it, but it has to do with how much profit you're making. A company needs to make a certain amount of profit, and so once it gets out of this range, it's getting where it's just too expensive based on what money that the company brings in.
Okay, well, maybe one of our topics for a future discussion, Carl, might be that accumulation distribution versus the on balance. Maybe we can talk about that next time you're on. I think that would be an interesting topic, and I know our listeners would like to hear your thoughts on maybe the difference. That's just maybe something we could think about for the next show.
Yeah, I'll make a note of that. But keeping in mind that I already know everything I want to know. I'm not interested in learning anything new.
That's funny. That's one of the funniest lines ever on Market Watch Live. I can appreciate that for sure. Anyway, it's always a pleasure having you on here, and we look forward to having you back sometime.
Okay, thank you, and it's been enjoyable.
All right. Thanks,
Excellent.
Carl.